Hello, everyone. Welcome to the Onchain India Podcast. Today, we have with us Akshay from Qiro, who is building an amazing RWA protocol. Akshay has been building Qiro for quite some time now. And Qiro is basically a credit oracle for RWAs. They've got some amazing partnerships, amazing product pipeline, and we would love to discuss in more detail on general RWAs and also about Qiro, Akshay. Welcome to the Onchain India Podcast, Akshay.
Thanks a lot, Farid. Thanks a lot, Pratik, for the Onchain India podcast. Happy to kind of dig deeper into the discussion, talk more about Qiro.
Awesome. Let's get started, Akshay.
Sure.
Akshay, we'll come to your background first, right? Because it's very interesting. You've worked in the traditional TradFi space for quite some time. And, I know you have some staggering, numbers which you managed to raise, for your previous company. And you've seen that entire, Web2 sort of an world. Now, if you see like a lot of people who are into Web3, there's always that sort of a demon factor which says, Web2 is like, all bullshit industry. Web3 solves this. And, we want to come. And specifically you coming from that hard background of TradFi and going into the RWAs, how was their thought process? And also would love to understand your journey, over there as well.
Sure, absolutely. So as far as my background is concerned, so I come with a fintech lending and a capital sourcing background. So where I spent almost a decade working for fintech and startups. So I started off with Phenomena, which was into consumer durable lending startup. So it was back in 2016, Metrics portfolio company. I was the first growth hire over there. So we were the ones to kind of introduce consumer lending fintech. And that's how I kind of entered into fintech space. So I ended up doing anything and everything like every other early stage startup or core team member, startup core team member does along with the founder. So I have done everything and anything in right from business development, sales, credit, all these things. Then eventually I understand what fintech means, and it kind of made me feel like I just want to continue with the fintech sector and start exploring different verticals in it. Then eventually I ended up working for other fintechs like Lending Card, which is again India's one of the biggest profitable SME lending fintech. Then I worked for Oxizo. Oxizo is again like a profitable and India's again one of the biggest fintech startup. So they're a part of our business group. And when I joined, it was comparatively small, but now they have a post-money valuation of a $6 billion. The Op Business Group is about to launch a IPO, one of the biggest startup IPO. So all in all, I kind of got an experience working across consumer lending, SME lending, and a corporate lending. So kind of leverage that. And in my last stint, I was working as a capital sourcing head for a B2B marketplace by the name of Fashinza. So I helped them raise a debt of more than 100 million for US, UAE, and India entity of the Fashinza group. So when I say debt, I'm talking about banking debt, venture debt, supply chain financing debt, all sorts of debt. So all in all, I kind of have an experience across fintech lending, capital sourcing. So that's my background looks like.
Amazing. I think love the figures, right? Because I think you having been and seeing a lot of these unicorns and decacons sort of journey. It's obviously that you come with a lot of inputs and a lot of ideas into it. So into your entry into Web3 and specifically the RWA space, Akshay, right? What was that motivation factor where you decided, hey, you know what, we're going to start this Qiro and build this amazing sort of things coming in?
So obviously, like my friend introduced me to the Web3 space. I had no idea about what crypto world looks like, what is Web3 and all of that stuff. But 4 years ago, my friend introduced me to Web3 space, and I got curious what is this world all looks like. And eventually, I always used to get to know about different things or different projects which have been coming up in the Web3, how they are solving the particular problem in the innovative fashion, leveraging blockchain as a technology. And then I ended up investing in 5 odd early stage startup in a small capacity. without knowing much about those projects or like that particular space. As in, like, I wasn't an expert as such, but then I thought, like, if this is a good way to kind of enter that space and like get your hands dirty and understand more about that space. From then, I think I kept in touch with folks like who are already in this space. My co-founder Nishikant, while he was working at a previous organization, we used to kind of chat around how things work, especially in terms of TradFi lending, how things work in DeFi lending. We used to kind of exchange notes, and that's how we stayed in touch from last 3-4 years. And eventually, we ended up starting a Web3 company 1.5 year back. That's Qiro.
Nice. Actually, going a bit more deeper, right? I mean, the RWA space is, buzzing hot, right, in past few years, and we have seen some, giants like BlackRocks and all the Western, sort of things coming up and tokenizing, a lot of these things. On the surface level, the use case is like pretty straightforward, which the Web2 world, it's a barrier of entry to a lot of people to acquire this high value assets, or be friendly to play around with them. And it was considered almost play within the ultra high guys who are in that segment. But Web3 coming in, I think for common people or contributors, it's much more easy because you're tokenizing things and stuff like that. And specifically what Qiro is trying to provide, like a credit oracle, right? So how does the product revolve around specifically on this part of it? And also, if you can share journey on the product as well, because I'm pretty sure once you spoke to few people from the start, there has been like multiple features and ideas that come in. Yeah.
Right. So starting from where I left, so like I come with a TradFi and a fintech lending background, and my co-founder Nishikant comes with a DeFi background, deep technical research expertise, and all of that stuff. So the RWA was the obvious move, where we have both of us had that kind of a common interest. But what exactly to in the RWA? So if you look at real world asset space, so there are multiple things which are happening: trading, borrowing, lending. So eventually we had an expertise, especially around the lending part. And if you look at the lending and a credit part, so in TradFi space, private credit is a huge, more than 1.7 trillion worth of market. And but if you look at the volumes which are happening in the emerging part of the world, where again, like a lot of amazing fintechs, like which I worked in India, or for that matter, there are different fintechs which are there across eastern part of the world or emerging part of the world. So they have a huge need of capital, but they can locally only source that capital. So eventually, what I'm trying to say, even if it's a 1.7 trillion dollar private credit market, only developed parts of the world like US and Europe, UK, they are dominating this particular market. But eventually, with this RWA as a narrative, so what is happening that number one, cross-border lending is enabled. Number two, so the off-chain loans are getting tokenized, so that people people sitting all across the globe, they can deploy and earn 10 to 15% kind of yield by investing in these different RWAs. So what we realized when we saw that already cross-border lending, tokenizing these loans on chain, all these problems were solved. The protocols or the marketplaces which solve this problem, eventually they were facing a problem of losses. So if you compare the losses which are happening in the TradFi setup and the DeFi setup, so DeFi is facing 4x more losses compared to TradFi. If the same set of transactions are happening in the TradFi setup, is just because DeFi has limited history and understanding, and TradFi has huge history and understanding and numbers to kind of crunch about. So eventually, what we realize, risk is something which credit risk is something which we can solve, and we decided to take a jab at by starting Qiro with a particular problem statement: any RWAs in the world from TradFi. So if somebody needs to translate the risk of these RWAs to the DeFi world, so we want to be that layer where Qiro can become that intermediary infrastructure, underwriting infrastructure, where we can evaluate the risk associated with these different RWAs and communicate that risk to the DeFi world, so that DeFi liquidity providers or DeFi folks can eventually take that uh, risk averse or maybe calculated approach by to invest liquidity in the TradFi space or RWAs.
Got it. Akshay, while we are at this topic of how Kiro started and what were the other motivating factors, would also love to hear from your experience. When you started, or obviously you had like I mean everyone has like 3-4 sort of core ideas which you feel are like world changing, right? And so how do you finalize down on it, and how do you go with that conviction, specifically in those early stages where you don't have a product, where you don't have, you're just discussing with your co-founder. What was that thought process in your mind?
No, definitely. I think like every other startup and the founders. So eventually, what we did is like we started digging deeper into like RWA as a space. We started talking to these different RWA founders of these protocols and marketplaces. So even if it's lending, Oracle, credit risk, different type of RWA ideas were there. So I remember that we were figuring out if it should be lending marketplace, it should be like you are creating underwriting as a service, or are you creating Oracle? So there were different ideas. Obviously, we were kind of brainstorming, and then eventually what we realize is uh, lending different lending protocols are there. So they have already solved the problem of cross-border lending, and second, they have already tokenized the loans on chain, and already the liquidity providers, stablecoin investors have an access to kind of invest via these different lending protocols. But still the volumes are not growing, and the reason the volumes are not growing because the risk is associated with a particular asset class when you are investing in the off-chain asset. So if you are not able to figure out the risk associated with those RWAs, then eventually there is a barrier, and the liquidity provider will not find a comfort to kind of deploy the capital. So eventually, after discussing all these different marketplace, underwriting as a service, Oracle, we thought that we could be that value add where we understand both parts of the world, DeFi and a TradFi, and we want to be that bridge who communicates the risk from the TradFi to DeFi world. And that's where we ended up deciding building a credit oracle for RWAs at Qiro.
Got it. Let's dive, more into the Kiro part of it, right, Akshay? So, given that you guys are building this, credit oracle, and definitely, I mean, it's one of like the hard line, for all the bigger RWA protocols come in. How does the Kiro product, stand now? And what sort of features, what sort of other innovative things that you guys are building, which are much helpful out in general for the RWA space.
Sure. So eventually, we decided to work on Kiro last year, April. From then, we ended up building a team and started working on a product early this year. So eventually, at this point of time, we have built the infrastructure. We are live on a private testnet. So what we have built at Kiro, when we say credit oracle for RWS, so eventually there are two parts to it. So there is an credit evaluation or underwriting infrastructure is in place, which is very much required to kind of collect the data of these different RWA asset classes and put it in a structured format. And then you need to have your own risk models or credit models to run around that data and the ratios to figure out the risk associated with that particular real world asset. And then there is other part to the Kiro when we say credit oracle for RWS. So there is a network of underwriters we have built. When we say underwriters, we are talking about the risk experts who already have the expertise to evaluate such different asset classes. So now that there is an infrastructure to evaluate these different real world assets, and then there is a network of risk experts who can evaluate these assets. So what you have done is the network of underwriters will leverage Kiro's underwriting infrastructure. Number one, to evaluate the risk associated with that asset. And second, if they're saying that this particular asset is really good and you should invest in it, so they have to take the first loss. So let's just say if it's a transaction of a $10 million and 20% is the first loss capital. So these network of underwriters, they have to participate with a 10-20% of a first loss capital, which eventually means if things go south, so they are the first ones to take the hit up to 20%. So eventually, earlier the problem was people enabled investment into the RWAs, and you are heavily relying on a central party or off-chain party, which is an intermediary or the asset originator itself, who is sourcing these different assets. And in a way, they are borrowing capital with their own risk assessment. So it needs to be third party and neutral, and that's where the network of underwriters plays a key role. And they're not only evaluating, but they're also participating in the risk. So eventually at Qiro, we collect the data, we onboard that particular real world asset, and then we put this data in a structured format, and the underwriters network will evaluate and participate in the risk, so that once that first loss capital is filled, which is like 20% tranche in my previous example, rest of the 80% tranche can be filled by stablecoin liquidity providers or institutional or retail. Anyone can participate in that. Regardless of you understand the risk or not, you can participate in the senior tranche or low risk tranche once the first loss capital is filled. So that's the overall narrative of what we are doing at Qiro when we say credit oracle for RWAs. And just I want to add one more thing. So we are starting up with the one specific use case, which is basically the fintech lenders. So we are starting up with fintech lenders use case, and eventually we'll expand the horizon of different RWAs.
Got it. So Akshay, does this mean like the bigger RWA protocols like Goldfinch and Centrifuge, who have been making some, enormous waves? So Kiro's, credit line of protocol, is being utilized by them, for all these heavy, sort of risk assets and stuff.
Yeah. So eventually, if you look at Centrifuge, Goldfinch, and Credixus of the world, so these are all different lending protocols. We consider them as a users in the longer run. So eventually, we can plug in. Qiro is offering the open infrastructure, so where lending protocols like Centrifuge and Goldfinch can leverage Qiro's underwriting infrastructure and network of underwriters who are not only evaluating the risk but participating in the risk. On the top of that, not just lending protocols, but DAOs and treasuries like MakerDAO. So where the treasuries are looking for, say, like double-digit yields. So they can also plug and play with Qiro's open infrastructure and participate in the risk, in the low risk, low return kind of a tranche, which is senior tranche.
Got it. Actually, jumping on to the funding part of it, right? I think you guys have managed to raise the first round, secured I think $1.2 million from some incredible VCs like Alliance, EV3, and other folks. So wanted to understand from your sort of thing, how was the fundraising journey, specifically, for Qiro in this context. And the sub question towards it is, especially for our, young founders and developers, sort of an audience, it's pretty hard, to raise. And I think what I remember is you guys started raising when it was, peak, bear market, FTX had just gone down. And I'm pretty sure, there were like pretty no's and stuff. So what is the general playbook, because you've been in that, fundraising spree for like over 6 months. So what's your general advice, for young devs over here?
Yeah, I mean, like every other new founder or aspiring founder. So what we did was like eventually it was like a journey. So when we started talking to VCs last year, so we realized that there are a lot of things we need to refine and we need to work on. So now that I spoke about a very specific use case of a fintech lenders. So earlier we were talking about tokenizing or catering to different asset class in one go from the beginning. So the laser focus is very much required when you are kind of picking a particular use case and solving, and then eventually scaling it from there. So that is one of the mistakes we have done when we were doing the fundraise, like early fundraise days I'm talking about. Because eventually people will understand that these guys are not ready, or maybe they're not clear on what they want to solve specifically. So to reach that point, it took us some time, and we ended up speaking with so many VCs. Then we realized we need to basically boil down to a one particular use case, kill in that particular use case, and then eventually scale it from there. So yeah, it was tough. Obviously, it was a tough market, but then we were very sure about the fact that this is what we want to solve. Maybe we need to refine, fine tune, but we were very clear about the fact that this is what something we want to solve about. And eventually, what matters is one particular VC who can support you and who can vouch for you is what you want. So we got that first check, and from then it kind of helped us build the confidence. And we boiled down, we refined someone who can, especially for the first round, pre-seed round, or the first fundraiser you do, and the first check you get, someone who can actually not only invest capital but can handhold and in a way help you point in the right direction is what is very much required. And and we are kind of in a way lucky to kind of get those kind of VCs in our pre-seed round, and that's what helped us from just as an idea stage to kind of coming at a product stage. Yeah.
Got it. No, I think this is very sort of sage advice, and I like your input. Like, I mean, instead of focusing on 4 5 use cases, or having like a long list, go behind one metrics, crack it down crazily, and justify what you're building over there. It always helps, right? Because it shows that sort of focus and clarity to the VC world out there. I think it's really good, and I've been like, it's really proud moment, the way that you guys have shaped up and raised the first round, and now going for the obviously the product launch, and getting some bigger customers. Actually, coming to the next part, I think you guys have completed the 0 to 1 journey, right? I mean, validation idea, got the initial fundraise, got the initial sort of customers, and feedback coming in and stuff. Going from like 0 to 1 is done. Now going from 1 to 10, and getting into the giant kind of a thing, and the sort of vision that you have, that this credit oracle can be used, and have that sort of an impact. How is your strategy? How is the thought process? How's the mental model to go from 1 to 10 sort of journey?
Yeah, I think you are right. So we built the product. So the product is up and live. So we are going on a mainnet in 2 months, 1 to 2 months kind of a timeline. Being said that, just getting product up and live is not going to solve like what we are trying to achieve. So eventually, we are specifically, like I said, one use case we are focusing on fintech lenders. So we have built a huge pipeline of fintech lenders where we have underwritten them. We have understood by talking to the fintechs, by digging deeper into their data, crunching numbers, and with the industry experts and the team which we have in team we have. So eventually, what is going to matter to us is how we can execute first couple of use cases, and what is the performance of those use cases is going to be very helpful and crucial for us to expand from there. But in a longer run, what we are trying to do is based on that performance and based on the different fintechs we are going to launch as a use case on Qiro. So that is going to help us fine tune the model even better. So eventually, what we can do is we can go and sell that particular model, which is like underwriting infrastructure or credit oracle for a fintech RWA or any other RWA, and just scale it from there, which can become like a plug and play solution for other lending protocols. So eventually, number one, execute the use case, which we have been speaking about, the fintech use case. Number two, fine tune that model, and which will eventually help us scale that to offer as a plug and play solution for different lending protocols. And from there, try and partner up with big guns like maybe Apollos of the world or Fasanara Capital, so which are or Franklin Templetons of the world. So whenever you're trying to partner up with such big giants, so you need to have a use case and working model in place. So that's going to be our next 2 to 3 quarters.
Amazing. I think it's been an incredible home run, Akshay, so far, and definitely, we're very confident that you guys, will go from 1 to 10 journey, and be, one of the most important protocols in the RWA space in the coming quarters. Coming to the last part, Akshay, just a general question, because you've been in the space, for over 2 years now. and day in day out, hearing about RWAs and like being into that kind of a circle. Say if you were to start fresh, what would be the couple of ideas that you would like to see getting executed? You know, just an inspiration for young folks over here.
Yeah. I mean, as far as RWA as a space, and if I have to start fresh, so I started up with like Credit Oracle, like we will boil down to that. When there are like tons of opportunities when you say RWA, especially if you look at lending as an industry. So there is collection, there is recovery, loan management systems, there is credit underwriting, there is sourcing of different set of borrowers based on the different loan products. There are tons of opportunities, and like all these things are already done and dusted in TradFi, but how you can innovate and leverage that TradFi intel and execute it via DeFi rails, that is going to be an interesting one. So not necessary that you can entirely take that entire stack of lending and a borrowing. You can pick and choose one specific particular problem, and then eventually try and execute via blockchain and DeFi. That's what I would say, especially for the folks who are in TradFi or fintech lending and who are trying to enter into RWS space, trying to get into Web3 from Web2 space. Yeah.
Got it. Thanks, Akshay. It was wonderful, chatting with you, getting to know your journey, getting to know Qiro, the product features, and also, some, good advice, for all the young audience over here. And we wish you the best, for the entire Qiro team. And hopefully you guys have a blasting, next few quarters.
Thanks a lot for hosting me on Onchain India, and really appreciate for all the support till now. Yeah.
See you.
Thanks a lot, Pratik. Yeah.